Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. All right, let's talk about where we've been, where we are, where we're going. Now, look, we've talked about this consolidation area. We talked about how the bears have plenty of opportunities to break 4,700, plenty of opportunities to hold that daily mid-band at the 20, engage the lower band, hold the 9. They weren't able to do it. And so what you get on Friday is you get a lift up and through that engages that upper band, which is not that big of a deal because the bandwidth is so tight. But now you've engaged an upper band ride, okay? Bands have expanded to 3.1, so they're still tight. You got consolidation, you get expansion. You can see the bands lifting up. So where does this have a chance to take us? 4,900 is, I'm not really going out on a limb there. If you get any kind of serious expansion, then you're talking about a test of big round number 5,000. Sorry, bears. I don't know what to tell you. What I would tell you is how many freaking opportunities in the last 10 sessions have you had to knock this thing down below 4,700 and stay there? So if the way this turns out is you're about to get your asses dragged behind the bus all the way to 5,000, you got nobody to blame but yourselves. So have a rant or do whatever, go hug your plush toy. I don't know what to tell you. But you had your chances, and here we are. So, I'm indifferent. I'm just as happy with a lower band ride as I am with an upper band ride. That's how we roll. I don't really care. But what I'm telling you is you've blown it now. So unless there's a piece of news or a piece of data or something that's going to bring this thing in and have this be a head fake up to a band ride down, which, look, from a trader's perspective, that sounds pretty cool to me. But unless you get that, it's going to be a slow kicking and screaming bleed up because they've got to work off this compression, okay? The other thing we talked about was when it made the all-time high on the futures contract before, when it went and did those 48.40s, cash did not go with it. What I said back then and what I've said all week is if you get another one, if you get another high on the derivative, you're not going to get two derivative highs without a cash high. So what do we have now? We got a new cash high. How does the tape deal with that? I don't know. It's been a really narrow rally. It's been a very narrow rally. And depending on the perspective that you look at that sentence with, you're like, well, it's really narrow, so it's got to come in. It's not real. Well, what if it becomes broad? Then what? What if everything else joins that isn't joining? You have to look at it that way too. How's it going to play? I don't know. I just work here. All I know is that you've got compression and expansion, you've got a second derivative high, and you have a new cash high. And unless there's a piece of data or a piece of news that's going to knock it down and keep it down, you're going to get dragged upward. How high? I don't know. Hourly chart. New weekly pivot comes in at 48.30. You can see, we are just not quite, we're about 90 handles above the daily mid-band now. You see the 9-day there. Where did it all go wrong? Right here. 47 was open for business back on Wednesday. You went and printed 46s and change. You had a chance to convert the monthly pivot into resistance. And kind of like back here with the 47.02 and the higher low that they ramped you on, you had this one, off we go. Gave you one little chance off the open on Friday, which was just a nice little dip buy, and then off we go. So like I said, it's not parabolic. The bears had their chances. They didn't convert those areas down below that needed to get converted into resistance. And it's unfortunate because underneath those areas you had a couple of nice little elevator shafts down there. And I know everybody knew it, everybody wanted it because they always do. Now they didn't get it, so are they going to fight it all the way up? Yes. Is that going to make it keep going? Probably, yeah. Usually does. I'm not saying anything that's unexpected with regard to the price action of the tape. Expect the tape to do what the tape typically does, and you will be on the correct side of things a heck of a lot more than you won't be. Being a contrarian means, I want to sound smart about 20% of the time, and I'm cool batting about 180. I don't want to bat 180. That's not how to be a trader for an extended period of time at all. So what do I expect? I expect them to drag these shorts up top. You got people trapped here. You got people trapped here. You got people trapped here. They're trapped. They've been adding. They're angry. Here we are. So what do we have going into today? Volume weighted average price 48.83. Proprietary moving average is 86 and change. Globex high is 48.90. I would expect this 48.78, this hourly mid's probably going to get a look. But the question is it going to get a look at 9 in the morning, or is it going to get a look at like 2 or 3 in the afternoon? We'll see how they deal with 4,900 if they get there. Is that going to hold it in? Roundies usually do get held in, especially big 100 handle round numbers. And if you're the bears, how do you fix this? Step 1 is close below the hourly mid-band. Make them look like you're actually involved, that you actually showed up for work. At that point, maybe you get some data. Things will start to gear down. You got the next Fed meeting, I think, on the 31st. So as we get into next week, things are going to slow down. People are going to start hedging their bets again, and you're going to end up in another area of compression. The question is, are we going to compress here, or are we going to compress up top somewhere? Or do they want to bring it a little closer to the weekly pivot? It's going to take some effort to get back to the weekly pivot. It's going to take some data. If it does get there, then that's a massive moment for the bears. Do they still have fuel to push it below, or is that the end of the line? So I need people looking at this expansion, this early in this expansion on the daily chart, realistically. You have to look at it for what it probably is, which is a slow motion move to the upside. And if it is a slow motion move to the upside, shorts are fine for a trade. But as far as anything that's going to go, you can be long, you can stand aside. Don't fight it short. Don't fight it short, because your brain and your account will not be where they need to be when it actually comes in. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.